I just want to. That's return.
All right,
Ready?
you guys are good to go.
Okay, the Lincoln Trustee and Trust Funds will now come to order. We fortunately have to talk about somebody who served the board excellently well, Jean Bodwin. She decided not to run for re-election, so her term ran out Tuesday night at the town meeting. We thank Jean for all her work. She did a fantastic job. She was awesome as a chief financial officer, and we will sadly miss her. Wish her the best of luck in her other pursuits. And this time we have a new member just elected Tuesday at the election, and I'm gonna let him do a little biography on himself quick, so we can meet him.
Okay, I've been a resident of the town of Lincoln for about 7 years. I'm retired. I served in the military. I'm an engineer. I worked at U.S. Patent Office, Department of State, Department of Navy. A few other things. I have 3 children over at school here. And I have I think a strong financial background. I understand most of the instruments and have worked with budgets before in the millions of dollars, and hope to be diligent in my duties here. So that's about it for me.
It sounds like you're just what we need, because we need somebody to be our new chief financial officer, and you got obviously the background, and that's great, because that's what we really need on this school. And welcome to the trustees of the trust fund.
Thank you very much.
Okay, this time we can turn things over to our panel. Frank and Donna, we appreciate their trip up today, so much nicer trip than it would have been, and we would have been, like, I thought we might even been canceling. The way they were presenting this storm.
Yeah, I was surprised to see you still had your town election.
We did.
On Tuesday.
Yeah, we had 80 towns that have a poll.
Yeah, as you and I chatted yesterday or informally
Yeah.
down south where we're from,
Right.
right around the
It was-
Manchester, Concord area, we really got walloped.
Yeah.
Yeah, there were a lot of cancellations down
Yeah.
there. I mean, I'm in Goffstown, and I was telling Donna to the west of us in the Monadnock, Peterborough region, you're hearing 30 inches, so.
Yeah,
I don't think-
Greenville got 30.
Yeah, so I think you would have got a call from us saying, no, we're not coming up today.
No, I would have, I was watching it, and had it been any, you're not risking your life. No.
Right, no.
Because we can always have, we can always have work sessions. We will probably have some with Paul coming on new.
Yep.
Which won't involve you unless we need a phone call, question or something, which
Yep.
we can set up.
Yeah, great, so.
But I want you risking your life, absolutely.
No. So we, but we always enjoy the chance to come up and just kind of review the 2 accounts that we handle for Paul's benefit. I did, just for the record, hand Paul a couple forms that we require, called a customer identification program form. That's a form that's mandated by the USA Patriot Act, so all banks know who their customers are.
Right.
Even though we recognize that our legal customer here is the town of Lincoln, you as representatives of the town just need to fill out a form, and Paul will take that back and get you all set up to receive monthly statements on each of the portfolios. And when I say each of the portfolios, of course, there's the capital reserves account and the perpetual trust funds account. So we'll get to that in a little bit. And what the town has hired us to do, Paul, is a couple of things. One, of course, is to oversee investments, make sure we're managing the portfolios in accordance with not only the town's investment policy statement, but the state of New Hampshire's mandates. As you know, the director of charitable trust kind of oversees the trustee of trust funds for municipalities. We also do the record keeping. Vikram, how are you?
Hello, see you. How are you?
Notice all our new members elected.
How are you?
Sir, nice to see you.
Nice to see you too. Apologies for
Oh, good.
almost late, but not quite.
No.
I walked in the building 9:59.
Well, we'll let it go.
Yeah. Thought you might be skiing today, but.
No, I knew he'd be, because I gave him a sign.
Yep, I brought the computer to take good notes too.
And he isn't gonna miss the election that's coming up. For all the campaigning we've done for these positions.
All right,
Not gonna miss out. I'm sorry.
No, it's okay. So I'll just, we oversee the portfolios, the investment portfolios in accordance with the mandate by the state and your investment policy statement. The other thing that we do, and I think this is just as important, is on a monthly and annual basis, we prepare what's called the MS9 form. That has to go to the to the state of New Hampshire on an annual basis. We provide that service for our municipal clients and send out that form on a monthly basis. So we'll continue to do that. And Paul, once you complete your contact information, we'll get you set up to receive, as I said, the statements on a monthly basis. We'll get you set up for online access if you so choose. And we'll make sure that our operations team that does the MS9 reporting sends you out a copy every month. So again, my name is Frank Anderson. I kind of oversee the day-to-day operational, functional, administrative work for the accounts. Any deposits, withdrawals, MS9 questions kind of flow through me. My colleague Donna Murray, Senior Vice President, Investment Manager, kind of oversees the portfolios. And what we do is we come up every 3 or 4 months and we sit down with you, give you an update on the economy, go through the portfolios. So you have a handle on what we're doing. And I think our last visit was in December. And at that time, we said, well, gee, you got the town elections coming up and warrant articles in March. So we'll keep a lot of cash on hand in the money market account. So we know until we get a better handle from you as to what the outflows might be from especially the capital reserves account. So hopefully we can get an update on that today. And with that, I guess I'll open it up and say, you know, as I typically do, we've filed the MS9 for 2022, so we're good there. Do you have any type of updated cash needs from the portfolio that we should be aware of?
I have nothing.
Nothing. Okay. As you know, we're going to be very cautious in that regard, right?
Right.
The good news is, as Donna will speak to, you know, the money market rates in the account with cash is, I think, a little over 4%, 4.16 on the government side. Which is a good thing. And, you know, 2 years ago, we wouldn't have wanted to sit here with all this cash earning 0.1%, but we're going to err on the side of caution. Capital reserves are for capital preservation and getting you a income yield that's, you know, in accordance with the market rates. What we don't want to do is get caught having to send you cash and having to sell a bond to do it. That's been in the news recently.
Yeah.
So I'm sure you know. So
Absolutely.
yeah, so with that, we'll have Donna speak a little bit about where we are in the economic, macroeconomic conditions, speak a little bit about capital reserves, our thought process there with the cash, and then speak, of course, to the trust funds, which are a little more longer term in nature.
Yeah, so hello, everyone. So we actually have a piece in here that we had sent out, and I sent it out to the Lincoln Trustee Fund sort of generic email address as opposed to everyone individually. I'm not sure who that goes to. But I think it's called Lincoln Trustees.
Can we give you our, I'm happy to have.
Yeah.
To me.
Yeah, we'll send it out. I have it.
Okay,
Yeah, I have it.
okay,
Yeah,
all right.
we'll send it out directly.
Okay, but it is also in the book right here. So starting, you know, I included it in the sort of economic overview, which is on this 2-page piece or 1.5-page piece that we sent out to clients the other day. Basically sort of discussing that what happened with the several banks that had to go into receivership. It's not the beginning of any kind of a global financial crisis. Basically, they were invested in more small cap type technological companies that they had loans with, and so obviously higher risk, and as well as what they did. So it's very sort of interesting, the whole pandemic money and what's happened with bank. And we're a bank. Actually, the head of wealth and I were just at the ALCO meeting recently with our bank, which is asset liability, making sure that assets are going to match liabilities. And you know, so when the government gave everybody all this money, they deposited into the banks. And then the banks weren't making loans during the pandemic, so they invested in treasuries, U.S. treasuries. Well, some banks, unfortunately, or corporate bonds, they went too long. They didn't match, understanding that people were probably going to be pulling those deposits out within 1 to 2 years of the pandemic sort of ending. You had to foresee that, and a lot of banks trying to, interest rates are very low. They wanted to get the highest yield possible. So they went longer out the curve, the maturity curve, in order to get a higher rate of return. Then what happened is when they started getting calls for deposits began shrinking, people were pulling the money out to live off of, and every bank has experienced this. If you weren't able, if your assets weren't maturing at that same rate, you would have to sell your assets. And because rates are going up, prices were down and it would be at a loss. And that's basically what happened with, Silicon. They got a call sort of on their money, people wanting to take the money out in order to make, they had to post wages and things like that. And there were some founding people who had initially invested money in the bank, who then were worried about the bank, seeing that the corporate bond or the US Treasury bonds that invested so long that the prices were down so much, they said, let's pull our money out. And it was more or less sort of a run on the bank. So to that effect, we've been listening to a lot of different, the best analysts out there who really have their fingers into the pulse of what's happening more than we ever could have, into the banking industry. And there will be probably a couple regional banks, smaller regional banks that might have some issues going out there, maybe 5 or 6. But if people don't make a run on all the banks, then everything will be fine. It really is most banks, for instance, our bank, yes, the assets that we have, they are maturing, or they have matured actually. So our asset liability mix is fine. And we have enough what they call liquidity for all the runnings of, what we need and expect. But if you start having people pull out money because they're scared, then you get run on the bank. It's a very different environment. So I think now with the government having come in and sort of quelled those initial fears that people will have their money available to them, they don't have to pull it out of the banking system, that's going to create that's calmed the fears of, the general public, so they won't be making a run on banks. So that's basically it. We did, for instance, even Credit Suisse yesterday was under a lot of pressure. And the stock had gone way down and the bonds were sort of nearing high yield levels as far as where they were trading. And it was announced that the Swiss National Bank did come in and say this morning that they were going to put a backstop for anything. So that again, so now the stock is up 20% today. So you can kind of see how these things, there's a lot of knee-jerk reaction in the market. So the bottom line is we don't expect this is sort of a blip on in the industry. It does though it does foreshadow perhaps the need for some greater oversight for some of the smaller regional banks, that they haven't, during times like this, that they aren't overextended. Of course, what happened was Trump had pulled back some of the Dodd-Frank requirements in the banking industry. And so there now, I think Senator Warren is out there right now proposing that a lot of those sort of oversights come back into regulation in as far as oversight in the smaller banking areas. So we'll see how that pans out, but really, as far as this having a broader effect on the market, we think that that's pretty much done for now. As far as other things, there's a couple charts in here. Inflation is still obviously the priority for the Federal Reserve. We just got a number yesterday at 6%. For overall year-over-year inflation, still higher than what they had anticipated, but the PPI, which is what the producers prices index, that came in lower, and that's really what foreshadows what businesses are going to have to sell their products for. So that should alleviate some of the inflationary pressure going forward. That all said, so with what happened with the banking industry, because when the Federal Reserve has raised interest rates so quickly, and the asset values, and you can see it in your own account as well, the asset values of what you own goes down, the prices go down. Everyone had thought that, or people, the general market consensus was that we get a 50 basis point increase in the next Federal Reserve meeting. Now they're anticipating a 25 basis point increase. They still need to quell the inflation, but they don't want to. They realize that what they've done has really had some adverse effects sort of in other parts of the economy last year. So then the Federal Reserve, they're slowing the pace of their increases, which is good. We do anticipate that rates will remain higher for a longer period of time, unless we get into real recessionary pressures and things start to really become chaos and truly a recession, wages, employment goes way down, and things like that, then we would anticipate for them to keep rates where they are. Otherwise, they would have to lower rates in order to spur the economy again. The good side to this is that there is income and fixed income again. So as we saw, even the money market fund that you're in, the government fund is at a 416. We had, oh, go ahead.
No, I misspoke. That was a December rate. The money market rate is 446.
Oh, okay, because I was
446.
wondering how it
That
went
was
down,
December.
so, okay,
Yeah,
okay.
446.
This should be right in here, yeah.
Well, that was through yesterday. I looked at it yesterday.
Oh, okay, okay. Yeah, okay, right, so it's
Yep.
444 in here. I mean, it will fluctuate somewhat. So right now, one of the things that we would look at as far as investing, if you want to go to, in the second tab actually is the trustees of trust funds, the investment policy statement. And Paul, you'll probably want to spend a little bit of time, reviewing this, but a lot of the language in here does refer back to RSA policies as well. I'm not going to go into too much detail on this. We do usually like to just make sure that everyone in the committee is aware that we are within all of the guidelines, well within all of the guidelines. So on tab 3, this is the capital reserve fund.
Oh, Donna, what-
Yeah.
Excuse me, before we talk specifics, I'm very curious, what if it gets worse?
What
is
if
the
what
ba-
gets worse?
The macroeconomic environment,
Uh-huh.
what if you do have bank runs? What if the financial contagion gets, we went from what we thought was a very contained thing in Silicon Valley to,
Mhm.
well, there was a New York bank that just failed.
Well,
too,
Signature.
Bank, and you got banks like First Republic, which has a large presence here in the Northeast as well, quite big, suffering some distress as well. They went to Europe, which then affected the US banks. Might be contained, but it might not be. And I'm sort of curious, what does that mean for the health of Bank of New Hampshire?
Mhm.
If there's some of these vulnerabilities, and the way I would ask that question is, and I don't know if you happen to know, but if you don't, I'd love to find out. What percentage of Bank of New Hampshire's deposits are above the FDIC threshold? That's proven to be a very telling indicator of bank run risk.
Mhm.
Meaning, look, if I don't have 250,000, in fact, I got less than that, so I'm not worried.
Right.
I'm not worried, but a bank that has lots of, very wealthy individuals, a concentrated customer base, maybe a bunch of businesses that are putting their money in their checking accounts, and therefore their deposits, lots of their accounts are over 250. Well, then they're subject to a run on the bank because people say, well, that money's not safe. I'm gonna get it out of there.
Absolutely.
Right.
I'm gonna take it to JP Morgan, right away. So what percentage of Bank of New Hampshire's deposit base?
That's very easy. We can get that. I don't know. Off the top of
Okay,
my
fine.
head.
I would love to hear just
But-
what percentage is uninsured, is the
Yeah.
way they describe it, right?
I will say though, so we have what's called a promontory, which is an investment account where most of our businesses house their cash as well as municipalities and things like that have larger cash balances. And that is actually, it's CDs purchased throughout the country at the 250,000 level or below. So, no one ever wants to be in a position where, so it's enough CDs out there because it's millions, and I don't know what the size of actually our promontory is. It competes with PDIP, which is, the other available venue for municipalities to put their money into that. So there's PDIP, and then some banks have their own sort of promontory in-house run. So basically, these are insured monies. So most of our businesses aren't in a need to keep any money above that amount, above the uninsured. You see what I'm saying? They can go
No,
into,
I'm asking a very different question, which is not necessarily municipal specific. I'm asking Bank of New Hampshire.
well, I understand that, but what I'm
Yeah,
saying is
so If
businesses,
there's a business here, let's say the Hampton Inn opens up, they gotta run payroll every 2 weeks. payroll is, let's say, $248,000, they got other needs, their bank balance is over 250 every day, probably, right? They're gonna need it because it's gonna go up and down, they're gonna be above 250.
Well, we'll get that answer too.
That's-
I'm just saying that we do have a venue that most of our businesses as well as municipalities.
Okay.
Do utilize. It's not just for municipalities. PDIP is. But our in-house investment promontory is for businesses as well. So for instance, you know, New Hampshire vaccine, which has millions and millions of dollars that they have on hand. I invest some of it in CDs myself for them,
Yeah.
as well as they go into for a more liquid purposes, because mine is pretty much tied
So it's
into.
almost like a money market fund effectively.
No, it's not a money, and because actually the money market fund, I heard you speaking about this before, money market funds are not FDIC insured.
Well, it depends.
Right, there are some,
A bank.
That's what-
a bank's money
Well, I
market,
know like Discover and some of these other ones I've been reading are FDIC.
Yeah,
right, but the money market fund, for instance, that your cash is invested in is not FDIC insured. It is actually a mutual fund. It's a money market mutual fund. So it's a very different instrument, you know, and it's important to understand that. So that's when they talked about years ago in 08 for the financial crisis, what were mutual funds gonna break the buck? You know, and there are all kinds of stopgap measures for that, but it is important for you to understand that. You know, so that any monies that you have invested in a wealth management account are not insured. I mean, unless you're insured, unless you go into just CDs.
And they don't have to be,
Right,
because they're not deposits, they're not an asset of the bank. So you take the extreme scenario where Bank of New Hampshire, after 189 years, goes under next week. Certainly depositors, retail accounts, trust. This is not an asset of the bank. This account, the Town of Lincoln Wealth Management account, would go right out back to the town. Of course, market value fluctuates, but it's the underlying investments in here, the underlying bond, which can fluctuate, but.
these assets are
Don't-
held at, they're in custody at a place completely separate from us. There's, it's, you know, there are custodian banks out there and the assets sit there. So they have nothing to do with, they can't get loaned out, they can't, there's the assets that are tied up themselves.
And there's no dimensions, Vikram, and the question's a good one, actually.
Yeah.
I'm curious myself, now that you ask it, I want
Yeah.
to find out, but, you know, a business has $10 million, they're gonna put it in Bank of New Hampshire, well, clearly. That there's an issue, so what we do, in some cases, I don't know about all, is this promontory account is that we open an account and then we spread that 10 million out to banks all over the country, up to the $250,000 limit, but you get one statement a month, it's from Bank of New Hampshire. But we have, for the very purposes of FDIC insurance, spread that out amongst various banks throughout the country.
Right,
Yeah, I mean, obviously, think of.
yeah,
Think of.
we don't,
Blue Mountain's checking account is
Yeah.
over 250.
yeah, right,
Obviously, sure.
Right?
Obviously.
Right,
So
yeah.
they gotta deal with this, and
Yeah.
there's lots of businesses in New Hampshire,
Yeah.
and I guess there's lots of them do business with you.
Sure,
And
Yeah.
again, it's not as if 0 is the right number.
right.
Obviously,
right,
people have monies that are uninsured at banks, obviously, all over the country.
Yep.
The level of what percentage of bank, now, if you have lots of individuals in there, that's a less risky bank.
Sure.
Very conservative, spread out, small, everyone's at 250, I'm not running to go take my money, they close the damn bank, that's all right,
Yeah.
it'll be fine.
Yeah.
Because I'm gonna still get my money, because it's under 250.
Right.
But they're, others that maybe will,
You're-
so it's a run risk measure.
Yeah.
Right,
If you
you
have
understand.
if you have SVP, you'll get your money back if you're over 250.
Well, see, that's a different thing.
That's a different- That, we probably shouldn't go there, but.
well, you know, that's the thing they're saying, though, that they open themselves up. Or, you know, if things
Right.
happen in the future, that they've kind of opened that can of worms, that, you know. It's like when they had the first hurricanes and they gave relief to everyone and rebuilt everyone's houses, or we, you know, put them in situations where they backstop the insurance companies and thing, and, you know, so. You know, once you start doing that, the government starts doing that, it's hard to stop, but I don't think that's gonna be a
I'll
situation.
email out this market perspective hard copy that we have in here to each of you, because we posted a statement on our online website, Bank of New Hampshire website that addresses some of this.
Well, Chris Logan,
Yeah.
yeah, the president of the bank, actually
We're-
did release a statement as
Yeah.
well to that effect. And so when we were in the ALCO meeting the other day, for instance, we were looking at what is available to us as credit from the Federal Reserve. We can get overnight funds and things like that. And, you know, the amount of our investment portfolio is about 320 million right now. And it's a $2 billion bank. And I can't remember the exact numbers, but you know, the amount that it's down, you know, as a percentage of the capital to the bank and all that kind of stuff is well within what our liquidity needs would be and what is available to us for other liquidity, whether it be getting, yes, to the overnight funds from the Federal Reserve and things like that, but we'll get you that answer. That's a great question. Any other questions sort of on what to expect? So in the individual accounts, so the capital reserves account, you'll see actually it says 1.6 million.
Tab 3.
I'm sorry, tab 3.
Yeah, this,
Yeah.
yeah.
The first page, 1.6 million, it's actually 1.7 because there was $125,000 UNH bond that matured yesterday. And this report was run before that maturity occurred on the 13th, and it matured yesterday. So I guess, you know, right now, as Frank was saying, we're at a 446. I just was looking at where, you know, if there was a desire to invest any of this money at all, I probably would suggest that we go ahead and do the 125 that just matured. But, you know, even if you go, and we normally would go out longer, the thing is now is that the curve is inverted, which means that short-term rates are much higher than longer-term rates. So it's very difficult to, and actually you can see that on the, in this chart here in tab 2, it shows the yield curve. And so this is a treasury curve. The corporate yield curve is a little bit flatter than this, but it just means normally you get a higher rate of return the longer you go out in the maturity scale, because the higher the risk of owning something, you know, for that time period. And so, you know, there's a lot of debate over whether you go ahead and stick to investing something that is very short, where, for instance, a 6-month treasury, I could get a 470, or a 1 year is only 420. So that's an example of sort of the inverted curve. I suggest that, you know, we don't expect for rates to stay up forever, maybe a year or so, and we don't expect for them to get too much higher than they already are, particularly in sort of that 5-year area. So I'd probably go ahead and reinvest that out into the 5-year area. If you change, go to page 2, you'll see that there's actually a bond maturity schedule. So, and this is what we call kind of a straight bond ladder, so that you always have, the idea of this is that you always have cash flow coming back at you, you know, for whatever requirements you might have. So the idea is we take that 125 and go ahead and invest it out into 2027. Even though the rates there probably in a corporate bond of of good quality, high quality, which is the mandate for the portfolio as well, maybe between 4.80 and 5% we could, you know, get, I would expect right now. So you can see at the top of this page 2 is the overall fixed income characteristics, very high quality, A+, A1 are the average ratings, a average weighted duration of about 2 years with average weighted maturity is about 2 years, and the yield to maturity is 5%. So, and I did include in this, Vikram, also the purchase maturity at cost at the very end there, which is something that you had requested.
I think it's fair, I mean, correct me if I'm wrong, right? It's fair to say, obviously, this is a lot of cash historically that we've had in the portfolio since we've been involved since 2019. Could we pick up 0.5%, 60 basis points by putting some of it to work? I think so. And
Mhm.
so, I mean, we're getting an attractive rate, relatively speaking, of 4.46 currently in cash, but to the extent that you can give us a ballpark of what the cash needs might be throughout the upcoming year, then we can put some of the money to work. And of course, we still have about 800,000 coming due throughout the year anyway. So I don't know what the number is, but I think some of that 1.7 million probably could stand to be put to work and pick up a little yield.
And if not now, then definitely, I think within, you start, within 2 years, because I think then rates will sort of start to come down, depending on what happens with the economy. And to your point also, Vikram, so if we really did get into a bad situation, right now, this is sort of the quivers and that the Federal Reserve has, is they have such a high, overnight rate that they can spur the economy on if they need to. Of course, then they risk, increasing inflation again on the other side. But, it's always been a fine dance. I try to be very transparent about my feeling that basically all of the reserve, national banks across the globe are doing the same thing. And it's a little bit of a house of cards. It really is. And we've gotten ourselves into that, relying on the tools, the government tools that we have, to be able to kind of keep the economy, pumping along and not getting into a disastrous state. And they've done a pretty good job of it, so here, did they make a little bit of a mistake by not getting in there soon enough when inflation reared its head? Yes. And then they had to push up rates quickly in order to make up for that. Okay, so it wasn't the perfect way to have things happen. But I think they do a pretty good job of trying to keep things stabilized. And I guess the big thing also going forward is the debt ceiling. That is a political arena that I'm a little bit sort of concerned about. And it's just because I sort of feel no matter how you feel about Republicans or Democrats, I feel that the Republicans are sort of ready to push the envelope a little bit to see what would happen, if they don't get their way, to maybe default on one coupon payment or something like that. I don't know. I hope that they wouldn't do that to try to test the system. But it is something right now that, all of this is kind of rightly so, but it's taken away, those headlines. And they're still very real, really, they're very there. And so that is something that definitely has to kind of, be addressed as well. And the longer that they take to address it, the more confused, I would say, that sort of investors, will be. So on tab 4, are there any questions about the capital reserve account? On tab 4 is the trust fund account. I won't go into too much, detail on this. This is invested in funds as opposed to individual securities. On tab 4 of 5, page 4, you can see the individual funds. And so I did add, normally we invest in, straight funds like the S&P 500 index funds. I did add a healthcare fund into the mix because we feel that healthcare, particularly right now, is a very strong. So it's a way to kind of add value, add alpha to the portfolio rather than just strictly investing in the S&P 500. We also have some international, and emerging markets, more so the international. We've been toying with the idea of increasing that. Because the expectation is that Europe is sort of coming out of this inflationary period faster than the United States, but that's not really so much proven right now. And then you can see the fixed income funds on the other side, investing in a short-term investment grade fund, which will take advantage of the inverted yield curve, as well as a floating rate fund, which will do the same, and then intermediate government corporate bond fund. Any questions? Tab 5 is the sort of the report card, is the performance for the account. Basically, for the capital reserve fund, you can see that there, unfortunately, the existing fixed income that does have a negative return at the moment. But so what happens with a bond at the time of maturity, you'll get your principal back. So it's less important what really happens to the prices of bonds as long as they're high quality during the time when you own them. It's just sort of reflecting interest rate movement. And then in the trust fund account, so if you look at the last year, again, unfortunately, there is overall sort of, the account down about 5%, but over the last 5 years or 3 years, the account was actually up about the same months, 5 3/4%. Looking at the equity component over a period of 3 years, up about close to 12%. So, hopefully in 1 to 2 years, we expect that the markets will continue to be volatile for the next year or so. And and then after that time, we do expect for us to come out probably with a pretty good growth spurt, getting back into at least 5%, 5 to 6% annual growth a year.
Longer term numbers are annualized for the trust funds, so that's 583 per year since inception.
Right.
For the total portfolio, 1155 per year for equities. And of course, last year was a tough market in the equity market and bonds. I mean, no place to hide last year. And the cap reserves, again, we don't focus so much on the total return per se. We just want to make sure you get a competitive yield in total income based on the current holdings, about 151,000 in income per year. So
And the priority is to make sure things are in high quality.
and exactly.
Yeah.
Yeah.
High quality, well diversified, no
Yeah.
sector overemphasized. So any questions?
I have just a question on the investment for getting the 5.83% for the total portfolio that we just went over. I mean, what would be wrong with just going with the S&P 500 straight up?
Or, instead of having added like the health fund?
All these different, yeah.
Well, the reason is that actually, because so the S&P 500, let's say, I think, healthcare is about 12%, something like that, 14% of the, of the total. We feel that healthcare is going to be much better than the overall, than the other sectors. Finances will be down. Tech has obviously, been a real disaster. Has been really, because tech is 23-24%
Right.
of the S&P 500. So it's really dragged, the whole
index down, yeah.
industry down. So what we're trying to do is add what we think sectors that we think will outperform to compensate for the sectors that are going to be down. So another one, we've sort of been toying, we manage money, a lot of money that also has individual securities. So we've increased, for instance, our allocation to energy. We've done that before, to healthcare. At one point, we'd increased in utilities. So we kind of do try to, not only investing in individual securities for that, but in a situation like this where we use funds, we use sector funds in order to compensate for areas in the S&P 500 that aren't doing well. We will add funds that we expect to do better.
Right.
Just a way to get us diversification, Paul, small, mid-cap companies, international. Certainly US large cap has been the place to be in light of the heavy tech weighting for the last several years, but
Right.
we just want to kind of diversify out.
Yeah.
No, and-
Mid-cap,
and
for
I get
instance,
that.
instead
I
of-
mean, I think there's a lot of diversity already in the S&P 500, but
Yep.
The other thing is these ratios. I mean, me personally, when I invest, which is not a lot of money by any means, but at least as much as this is anyways, right?
Mhm.
But I'm all equity. I'm like 100% equity. I don't do any of these bonds at all because I think they're over 40 years of investing, they just don't return. Not even close, not at all. Yet somehow all these towns and all these organizations, all these nonprofits, they're going blah, 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 they get nothing for their money. It's such a drag. I mean, they're killing themselves, you know? I mean, I'm the finance officer over at the Legion, and you just hit your head against the wall. They're just watching their money dissolve and just go away the
Well-
entire time. And I just, and I understand there's risk when we have to do some of these things, but I mean, these ratios, I disagree with wholeheartedly. I mean, I don't think we need to do 40% in bonds or 60% in bonds, you know, I would go. Me personally, again, my portfolio, it's all equity. It's all equity, and I just write it, and after like 3 years, the numbers just work themselves out, you know?
Historically, yeah, that has what's happened, and that's why, but you know, I think in individual money management, so I manage money for all different types of individuals as well as nonprofits and as well as municipalities. And I think the point is that you do have to have that balance of risk. And I will say right now, when you can get something that's returning about 5%, that's actually a decent return on your money that's very risk-free, basically. And it's also, there's portfolio theory that says that, you know, what we really look at when we look at risk is how much incremental return am I getting for every portion of risk that I'm taking? And when you add actually fixed income or alternatives to a portfolio, they oftentimes will, reduce the amount of risk that you're taking for the same or even oftentimes more return over longer periods of time. And so if you look at, because, and really, obviously these have long-term, you know, and that's where the confusion comes, because over the long term, yes, equities are going to win. So why would you even have bonds? But I think that there is the risk that who knows what might happen. I think that, you know, you do have to have a portion that is allocated to something that doesn't have that same risk component.
Yeah, in our discussion, certainly for individual high net worth families. Persons, we could have that conversation, Paul, but of course, the capital reserve funds with a separate mandate from the state. The trust funds, you know, we wouldn't want to be in a position with the market down 18% last year and needing to send money out to you. The state probably wouldn't look too kindly on that. But in general, we do have these types of conversations with our individual clients. And, you know, some people are like yourselves who will take on risk and their eyes are way down the road, and others, you know, don't like when they get their statement and it's down a couple $1,000s. So it's a valid question. What we're trying to do here for the town is a little different because we obviously have the state mandate that we have to adhere to. Right?
Yeah.
It's and I've read a little bit about the trustee handbook, but what state mandate are you specifically talking about?
Well, capital preservation on the capital reserves funds. I mean, that's our mandate on capital reserves.
That's the budgetary.
Yeah, right, we can't lose principal, the capital reserves fund.
It's
What I
literally
find is
cannot
when these
lose
clients, it is all about not losing. They're not trying to win.
They're just trying to get something
They're not
for
trying to
them.
win.
Yeah.
Cover your ass.
That's
Like,
it.
Didn't lose up a dollar in my watch. Like, you took taxpayer dollars, you lost a penny.
Yeah.
That's rude.
And this
Right.
is,
Yeah.
Even if you compound $10,
Yeah.
you gain later, doesn't
Yeah.
matter. You lost a penny this quarter.
It's all,
right.
You know,
well,
so
that-
I think there's some, you know,
it's definitely not about winning anything.
We have one municipality in the state that has committed, I think, about 20% of their capital reserves to the equity side of the equation. And that's because they've never historically fallen below a certain dollar amount. We didn't recommend it,
Right.
but to your point, they just felt
Yeah.
that they always had the cash on hand and they've never gone below a certain amount. The trust funds, which are perpetual in nature, yeah, you get a little different conversation there. You could argue about what the maximum equity allocation should be. But again, we don't want to be in a position with a down market and having to send money out to the trustees, because then you have to answer to your neighbors.
Right.
And as we say, we're always willing to come up and sit with you if that topic ever had to be addressed.
Right, and being new here, I just wanted to Well,
Good question.
Yeah, yeah.
Yeah,
yeah.
understood.
That's for my mind.
Yeah.
So,
no, it
like-
makes sense, makes,
Oh, yeah.
exactly,
Yeah.
makes sense, makes returns, sense, makes investment
Yeah.
sense. It just doesn't make political sense in
Right.
this domain for this particular purpose.
Right.
For that reason. But look, I think we should explore everything.
Oh, absolutely.
So we can kind of wrap our hands around the cash needs a little bit. No urgency here. We're getting paid to wait. We're getting a good yield. We'll continue. What I'll do, Paul, is I'm gonna, when I get back, I'll send out an email to all three of you because of course Gene was our primary transactional contact, right? So we want to make sure nothing gets lost in the shuffle. I'll cross-reference Terry Linden, my colleague at Bank of New Hampshire is the operations head and she kind of does the monthly MS9 reporting.
Right.
And any withdrawals or deposits from Gene would flow through her. So I'll just cross-reference all of us. So if there's anything
So,
that you need, while we kind of make up the slack for Gene's departure, we don't miss it. Does that make sense?
Yeah.
Yeah, and I'll get you
I'll
out
be
there.
fine with Paul, got a great background.
Yep, good. And I think what we do, Gene would send us a fax of pre-authorized form that would send down to you. And she'd say, we're making a deposit, here are the funds to credit. Or we're taking withdrawal, here are the funds to take it out of. And it'll make sense, more sense as we move forward.
Sure, exactly.
You could even send them a copy of what we received in the past.
We can, yeah,
Yeah.
get away with that.
Yeah.
So anything,
Jean has also left a disc with all information on
You
it.
did.
Okay.
That she's gonna, we were gonna meet today, but she had a family emergency, so that had to be postponed. Once we sit down with that, that's gonna help Paul a lot because she's got everything on disc and it should be great for him to be looking at.
yeah, and as Donna references, we have copies of previous withdrawals and, you know, part of what, again, would be on the money management and the record keeping is the compliance stuff, which we try to do on your behalf. So if there's ever any question, we have everything right there. Here's when it was taken out, here's where it went, so.
How was June 15th?
Yeah, that works, right? About 3 months.
Yeah.
I know it'll be warmer, right?
Yeah, we're not talking about snowstorms,
Okay.
hopefully.
So it's interesting, I was gonna ask the question.
Is that okay? for you?
Yeah, I think it does, if we
Oh,
do it daytime.
I think so.
If we do
Close enough to
daytime, I
school
have a
time.
TV I'll be around.
Is everybody still happy with 10 o'clock in the morning?
Can work for me.
Yeah, I think it's great.
I was just gonna ask the question,
Oh,
does it make sense to do it after a quarter? And
We were just
rather
talking
than
about.
Don't, I was saying,
2 weeks before a quarter?
Yeah, we were sort of talking about
Get
that
different
too.
reports and more information.
You know, I see what you're saying.
Well, I'm just basing it on what we've done, you know, our meetings in the past.
We'd have a lot more.
yeah, I
information.
think if we got on the July, October,
It would just shift it and
Right.
get the full quarter.
then we get a 6-month number for this year, so. Yeah, and as you, for Paul's reference,
No.
as you know, anytime you need an ad hoc meeting. Or a phone,
Yeah.
you know, if to your point, Vikram, if the banks do start going on, we'll obviously come up and
If
see.
you want to do July?
Yes, to July.
we
I
can
I was
think
just thinking
calendar-
for the purpose of you guys are preparing quarterly end reports anyway.
it's
so
a little-
It's more information.
It's a little easier to pull it up.
Well, it matches up, yeah.
Is that easy for you?
Yeah.
I mean, we've been doing like January, April, June, September, December, that's what we've been doing over the last few years.
Yeah, January's fine.
Yeah, January, yeah.
January, at year end.
Yeah, January, April, July, October.
Okay, July, yeah, instead of June, September, July,
Yeah.
October.
Yeah.
Fixes it.
That would, Don and I would, gonna suggest that at some point.
Okay, well, July,
What do you got?
July,
want to do middle of July?
Sure.
the
how
20th is
about-
a Thursday? Oh.
How about July 13th?
Well, we'll have the numbers, right?
Yeah, it's usually the 8th business day, so we should, yeah.
We want you to,
Six.
I want to do the 20th, the 13th is not right.
I think we should have it by, let's see, it's 1, 2, 3, 4, 5, 6, 7, 8, that's 9 business days in, we should have performance by
So
then.
you want to do 20th then?
20th or 13th. It
Yeah.
doesn't matter to me.
Huh?
Doesn't matter. 20th, that way we're
Do
sure.
the 20th,
That
All
way
right,
we're
20th,
sure.
yeah,
Okay,
10 AM.
Went out. Thanks. So July 20th.
And if we need to chat ahead of time for whatever reason.
Yeah.
you
I mean, we're probably gonna, would that be, I think we should have a work session with this. Bring Jean, bring her stuff in and then we can
Yeah,
know what's
to the
going on.
extent we can help out, let us know, but,
Yeah.
we just wanna make sure nothing falls through the cracks.
and we'll get your answer to you. Nicholas.
Yeah.
Okay, perfect.
Yeah, I want to know myself.
Yeah,
One of these things is worth knowing, I think.
Yeah.
As long as they can make payroll, Vikram, I'm happy.
Yeah.
Oh, yeah.
Look, I think it's less risky given the nature of our local economy.
Right,
It's
yeah.
just this, it's just.
I think that's-
risky given we don't have
Yeah.
really concentrated. Even Silicon Valley Bank, I heard their average deposits per bank. In America, the average deposits per bank is somewhere like $5 to $7 million per branch.
Mhm,
Yeah.
Silicon Valley was running at 75 to $100 million per branch.
mhm.
Really concentrated.
And
customer base.
these venture capital money.
And it's,
startup-
and it was even worse because it may look like 7 or 10 different companies there, but there was one venture capitalist who called. the
Who
shots.
had shells,
7 of them.
yeah,
Same
right.
portfolio.
So even more intensely concentrated than
Yeah.
we think. So, yeah, anyway, I don't think it's as big a risk, but I'd like to know.
Yeah, very good, we'll do that.
Okay.
Thanks, Paul, did you complete those
I
forms
think
for me? And
you take a look and
make sure that you're not listening to other terrorists or anything.
No, I just always had it down.
That's okay.
Or email that. Well, you know what? It's probably not on there. We asked for it actually. Okay. Under just right on the back.
Thank you. It's superb.
Great job. I was quite surprised that I'm online.
Was it just too much time?
Yeah, she's doing other things now
Yeah.
too.
How many years has she been doing it?
Belmont, the town of Belmont?
Yeah, she was.
Yeah.
She was 4 years on it.
Okay.
Thanks for the presentation. It's very informative.
Well, good, I'm glad to have it
I've been
on.
on 9 years.
You'll get mine and Donna's email.
Yeah, right?
today.
Yeah.
Any questions as you go through this, just shoot on to us, okay?
Great.
You got it.
All right, thanks, guys.
Bye-bye.
Thanks, Frank.
All right,
Have a
thanks,
safe trip back.
right into the office.
Thanks, Donna. Appreciate it.
I'll be,
Kenny Paul, I call it the radio.
Okay. We'll be finished, but
Yeah.
I just want to hear that we're doing. Before we get into elections, also put in the minutes that Paul with a brief biography of his background was excellent in finance and would be a great asset to the board.
Okay, the,
your last name?
short ones, SCHIRDUAN.
Okay, perfect.
Yeah, I'm gonna need your their name, phone number and email. Yeah. Okay. This one. Legs here. That better?
It is better.
Good, thanks.
Yeah, Bertram, we met outside town hall. I was running for state
I
representative.
remember that. That's why I thought your last name, but I didn't know
We
if it
took
was a you
pictures.
name. Or for some reason I thought it was
I
Jay.
thought you looked familiar when you came
And then
in.
we took a picture and said to Jason.
So Osborne.
Right.
Osborne's a good friend. I'm gonna see him tomorrow.
Good, good. He called me and he told me if I needed any help with my campaign, whatever. But yeah, I like that he's up there. Absolutely. Hopefully we'll join him one day, right? Well, not you, but I don't know, maybe you go state or something.
Well, it's interesting. My personal interests are so much national and.
I know.
So it's just, I would love to be helpful, but it's just I'm not as informed, I don't think it's the best way for me to add value to share, like I can help it. Global stuff, that's what I've done my whole life.
Right,
So,
I know, I totally get that. I totally
that was
get
the
that. You have a wheelhouse that you're. that
Yeah, so
you're
would she
considering.
care, I mean, neither better nor worse, it's just different,
Right.
I just focus on inflation. Other people may care more about local issues or, legalizing marijuana, whatever.
Right,
So
right.
there's different issues.
Okay,
Back to business,
back
sorry.
to business.
All right.
Well, that was great.
After,
sorry.
after,
We did,
after the distraction, the chairman called the meeting to order again.
I did mention to Corinne, we talked about this before about putting us on, getting us on Zoom, be on YouTube. And she did last time and it was great. And I noticed, told her today, we had 35 people watch it.
Was that right?
So I think that's,
That's great.
people,
That's a big number.
people came to me a few months ago and said, how come trustees, all the towns, and you're chairman, why are we on? So I'll look into it, and we didn't have a Zoom. Corinne did a great job, got us a Zoom, got us on, And I've noticed we had 35 people. Now that is, might not seem like a lot, but when you look at other towns, some of their meetings are drawing 17, 18, 19.
Were those
views.
or after?
What's on YouTube?
Recordings? Yeah, so the recorded version.
Yeah, so, yeah, we used to be on.
Well, live recording, because sometimes when you come to any of these meetings, usually there's one person, if
Well,
that.
Well, that's it.
Yeah.
Well, I had people ask me why
Or
we
not.
went. Apparently somebody is watching and then, welcome, and I'm glad you're watching us.
Right, absolutely, I
that's-
agree.
With the government. Okay, next one won't take long. Election of officers. Everybody's got all this campaign stuff by the way, so we're all legally covered. Okay. First thing, do I hear a nomination for the office of chairman?
Yeah, you.
Okay,
I second
do I
it.
hear a second? Thank you. Any discussion? It would be. All those in favor? Aye. Opposed, abstained?
So, just so I know, how do I document this, that a motion was
Yeah,
made?
motion made by you, so
Yeah.
you re-elect the chairman.
Was made. 1, 2, 8.
Seconded by Paul. No discussion.
All right, so I just want to make sure I get the format right, because I haven't done it.
Yeah, you're doing fine. The unanimous vote.
Okay, good. I'll clean this up later. I
Oh, yeah.
just wanna Make sure I get.
Don't
the
worry
basics.
about it now. Meeting's next till July, so you got plenty of time. I would like to make a motion. Nominate Paul as our new chief financial officer, at Gene's old position. I know in the record books it says treasurer and everything and bookkeeper, but we've always had a chief financial officer because it is doing a lot of financial stuff. So, and based on his biography this morning and knowing the campaign for office and everything, definitely has the experience. And I think you're doing an awesome job and I heartily nominate him for that position. Do I hear a second?
I will second.
Second, any discussion? All those in favor signify by saying aye. Aye, opposed, abstained, passed. Congratulations, Paul, you're the new chief financial officer. Thank you, trustees of the trust fund. I would also like to nominate a good man. Man, it's done a great job on this board, asked great questions today too, by the way. For secretary. Do I hear a second?
I second that.
Second, all those in favor?
I,
Aye, oppose, abstain. Pass.
Nominate.
And that's it. And keep in mind, our minutes are no longer than a page or half a page.
Sure, what is it?
It is our latest minutes.
What is it? Secretary?
Secretary.
Secretary, I just want to make sure. I put the
Paul,
right-
if you'd like to look at these minutes before we prove them, it's pretty quick to read, instead of me reading them.
Yeah, I just want to make sure I write these all down.
Right.
Okay, I'll clean it all up later.
Yeah, we all, yeah, there's something there. Okay. Takes care of that. We're all officially. After town meeting, you're supposed to reorganize boards. I've been on boards in some states, we have so many days to do it. New Hampshire does not have any such ruling. But I figure as long as we're here,
You're here.
hearing this, we're gonna do this. Everybody's still comfortable with 10 o'clock in the morning meetings. Okay, we used to meet in the afternoon because we had a person that didn't like morning meetings. So we're comfortable with that. We will set up, once Jean gets her situation is under control, we will meet. All of us will go over it and Jean can give you all her, she's got a list of all her stuff, so that's gonna be great, great
Put
help
the
to
next
you.
meeting in here. Next meeting scheduled for, or do you not?
Well, our next meeting would
Scheduled for
bank would be July 20th,
That's good schedule.
but we'll probably have a work session. We always used to have, just so you know, Paul, we used to have work sessions. I've been on the board since 2015.
Okay.
And we used to have work sessions when I was vice chair and then chair.
10 a.m.
I think they're a good thing. It's good for the public to see. It just, doesn't involve the bank people. We can. Call them if something comes up, it's an emergency, or they will come up in situations. It's not a problem with that. Also, something that, I'm the one that, when I came on this board, heard this many times, but we were getting $229 a year on almost $2 million. I thought it was a typo.
Wow,
I thought it was a typo.
okay,
First thing I did when I got on the board, started inviting, we had 5 different banks come in. And listen to their wealth management group. Took 3 years. I really had to push to get it done. And a lot of people were not happy with doing this. They were happy with the bank they were with at the time. I wasn't. We did eventually get different people on the board and got Bank New Hampshire. They've done an outstanding job with handling our money. I would hate to think by now, maybe we would have been getting 3 1/4 the other bank, so I'm glad that that's not an issue anymore. Also, something else that I used to do. I used to check out CDs independent of the wealth management program. And we had a bank, very interesting story about this bank, primary bank, they have 1 branch in New Hampshire. We got a CD with them. $230,000 for 2.45, unheard of, that interest rate. We made a lot of money with that. We did very good. We also got a CD from TD Bank. And we did well with that. When we went into the wealth management program, naturally the bank wanted us to, they wanted us to take that money out, and I was against, especially primary bank losing that CD because we made a lot of money with that bank, but I was voted down on that motion, so we let it go. Primary bank now has, I think it's 4 branches. And they were quite surprised that we did, and I explained to the vice president that it wasn't, it was the other 2 members. I wanted to stay with you guys because we made a lot of money on that. So it was a big deal at the time. So I'm keeping my eyes out for different CDs. If I see something that looks interesting, I'm definitely bring it up to the board's attention. And we can decide if we want to take some money and do that. I don't see anything wrong with it. Nothing against Bank of New Hampshire, they've done a great job.
right, I mean,
But if something comes along that looks, and I mean, that was a prime time, I don't know what, but prime time deal, I'll call it that.
right,
Because that money we made on that was fantastic. I remember we used to appear in front of the budget committee. And they were quite surprised by that 1 CD, the money we made on it, because that rate was unheard of.
yeah, I'm all for, the money working for us,
Oh,
absolutely.
absolutely.
Absolutely,
Yeah.
and getting the best options, with you fine gentlemen here, I think I don't have 0 worries about where we're at and where we're going. In fact, I'm a lagger, but maybe I'll learn something along the way.
Well, I think you're coming in with quite a background, and I appreciate that, and that's important. Over the years, I've been on boards in different states where people wanted to be on the board, and that's fine, but that's what they want to do. And then they go home and forget about it for another 2, 3 weeks, months, whatever, it is. And we don't want that yet. We've really got this board rolling. This is I mean, they used to meet once a year. Right, you can't, that just doesn't make sense. I'm not meeting crazy, but on the other hand, if you need to meet, we're gonna meet. If we have to have a work session, if anybody on the board has a problem, something, or a question, or an idea or something, we can meet. You have to just have to post it, but we normally post it like 2 weeks. And I don't see a problem either. I think we're gonna be fine. We got a good.
Yeah.
We got 2 great guys here.
Right, and I'm retired, so I do have some extra capacity, so I do have 3 kids, so that does take some of my time, but
I would think.
I don't work, honestly.
I got you.
Outside the family, so I'm fine, time-wise.
All right, next thing is the approval of minutes. Paul, you had a chance to read these.
I did.
Like if you saw these, right? Is there any question on the minutes? Okay, again, as we noted, we normally a page is pushing it for us to have a page. And unlike other boards that are like plans, like 40 pages, because they have all these charts and lawyers that come in. It's a lot of minutes. Okay, do I hear a motion to approve the minutes from December 15th, 2022? Move so moved. Do I hear a second?
I second.
Second it. Are there any discussion? Hearing none. All those in favor of approving the minutes, the trustee board on December 15th, 2022. Please signify by saying aye. Aye. Oppose, abstain. Yeah, passed our minutes. Okay, is there any old business? I think we covered that with the being on YouTube and everything. Now that's old business. Anything new? We have the new meeting. As soon as we can set up something with Gene, we'll be in touch. And I think that's just have a work session. That's probably the best thing to do. That way we can have a formalize it, put the notice out. Obviously, just so you know, Paul, the notice is on the town website. It's also posted in the Lincoln Post Office.
Right, that's where I saw them both
Yeah,
places.
Yeah, and I give Jane these minutes like 2 weeks beforehand, so you know, excuse me, agenda, not the minutes. Yeah, you cover that. Okay. I can sign these minutes and turn them into Jane. Is there any other questions or comments? I think you guys had great questions today for the bank people, and that's great. No problem with.
Yeah, it was very in depth. I'm surprised they had such
Yeah.
deep depth answers, actually. I
Well, they
expected to do that.
Yeah, they've done a fantastic and compared to. I mean,
Not that I agree with everything, but I.
No,
definitely-
no,
it's
no.
definitely there.
Oh, we had banks come in here and you know, I said, well, suppose, you know, God forbid, you know, a fire truck burns overnight, that are we covered? Well, we don't believe in the acts of God and stuff. Okay, you know what? Next bank, we actually had banks come in to say that, and they said, well, we can't, and I said, suppose we need $100,000. Somebody, like, I get a email from the town manager, we need $100,000 by tomorrow morning. What is your policy on it? Well, that has to be run through the board. Yeah, that, not your body, that's not gonna work. Okay, I guess we can.
Motion to adjourn?
Motion to adjourn,
All right, so moved.
so moved, seconded, all those in favor, aye, opposed, abstained. We are done at 11:07.
Yeah.
Pretty good. 11:07, very good.
Perfect, excellent.
I mean, there's times that we've been done in
Late.
30 minutes, that we've been 2 hours sometimes, hour and a half, we don't
Right.
run too long.
No, we're pretty efficient.
But I think we're good.
You run a tight ship.
Well, I got great people. It's very easy to be. I was chairman of a 21 member board one time. And let me tell you, I wore out 2 of these and 2 of these because they get talking about what they're gonna do tonight.
It's funny, I never thought about
Yeah.
that.
21 people in a small room,
Mhm.
uncomfortable chairs to be sure, not like these nice chairs. And it was something.
What board was this now?
This was for Washington DC, a political board,
Oh, boy.
campaign activities committee.
Campaign activity.
I was a deputy press secretary.
Wow. For like a political party?
Yeah, political,
Okay,
re-election of the president, 72.
nice. Nice. Oh, I could see how that could be.
Yeah.
Yeah.
All right, well, yeah,
We are
I'm
done.
gonna have to run.
Yeah, we're done.
We're done, jump on the radio.
We're done. Oh, good for you.
With Jack Heap.
Good for you.
Nice
Okay,
meeting you
thanks,
again.
Steve.
Nice meeting you, Paul. You take care. Oh, let me write down my information.
Yeah, I don't. Somewhere over there.
Yep.
Wrote it down your names.
Yeah.
Okay.
See you guys
Enjoy
later.
your
See
day.
you later. All right, there's the phone number, there's.
Thank you.
Thank you. I appreciate your joining
No, I was
board. I appreciate it.
I was surprised they did actually have, some, investment in equities.
Yep.
I was, because my very short exposure to some financial institutions, they won't even acknowledge that it even exists as a financial, as a fiscal instrument, it's just like, what,
Wow.
I mean, like believe, it's just.
Yeah, what you were saying.
It's just like, nothing, you can't do anything,
Wow.
but hopefully I'll break them down a little bit,
I hope so.
But this would be a good, but even this would be a good example for them to see of, like, listen, they have some bonds and equity and cash. We really don't have. Really don't have that same formula going, you know, so.
Gotcha. I understand. CHIRDUAL,
DUAN,
DUAN,
I know, my chicken scratches is that,
AN.
and then the email is the exact same, is my name.
Right.
Just first and last plus @hotmail.com.
Good. I'll give these to, I'll give you to Jane right now, and then I'll come back up. I'm gonna shut off the YouTube.
All right, Herb, I'm gonna take off there.
Yeah, fine. Nice to meet you. I look forward to working with you.
Yep, me too.
Think you're gonna be a great asset.
Thank you.
All right, take care. Thank you, appreciate it. Somebody shut off the Thank you.
All set? How
All
about
set,
it?
Corinne?
We'll shut this down for you.
Yeah, I think you want to leave.